Is strategy a Ponzi scheme?
Ponzi?
Will it be the next Black Swan that sends Bitcoin to zero? These are the questions everyone has been asking me lately. The recent market drop has awakened the ghosts of 2022, and fear has focused on one gigantic target, Michael Saylor's company, which today holds 650,000 Bitcoin. We're talking about over 3% of the total existing supply. But how much truth is there behind this panic? Is it just FUD, or is there a real mathematical risk that this giant could collapse? Today, I want to run a truth session. No cheerleading, no blind hatred. I put Strategy's balance sheet under a microscope. I analyzed the debt, maturities, and worst-case scenarios. Because if there's one thing I've learned, it's that numbers never lie. Let's start by sweeping away the biggest nonsense I see on social media. If someone writes, if Bitcoin drops below $74,000, Strategy gets liquidated, block that account. They're misleading you. Strategy is not a trader opening a 100x leveraged long on an exchange. There is no instant liquidation price where a margin call triggers. Strategy works like a corporation issuing debt through convertible bonds. The problem isn't today's price, it's the debt maturity date. The first major one is in 2028. Until then, Saylor doesn't need to repay principal. He only needs to service interest. So delete instant liquidation from your vocabulary. Risk exists, but it's far more complex. Now the uncomfortable question. Is strategy a Ponzi? The short answer. And no, it isn't a scam. A Ponzi scheme is backed by nothing and relies on lies. Strategy is a NASDAQ-listed company with transparent financials and a real underlying asset, Bitcoin. However, let's be honest, the model does have characteristics of what we call Ponzinomics, or high reflexivity. What do I mean? Recently, they raised a $1.4 billion cash reserve by selling new shares. What is that money used for? To pay dividends to previous investors. Technically, they are paying old investors with money from new ones by diluting shareholders. It's not illegal, it's financial engineering. But it's a mechanism that only works as long as the music plays, meaning as long as there is demand for their stock. There's a crucial figure you need to know, M-NAV. It's the ratio between the company's valuation and the value of the Bitcoin it holds. If this number is above 1, it means the market pays a premium to buy strategy. But if it drops below 1, it means the company is worth less than the Bitcoin it holds. And here Saylor made an admission that shook maximalists. He said that if M-NAV falls too low, to pay dividends or debts, he might be forced to sell Bitcoin. The mantra, "we will never sell," became, "we won't sell unless we have to." So what happens if things go wrong? Let's imagine the worst case. Bitcoin crashes 70 to 80% and stays low for years, combined with a stock market collapse. Strategy can no longer raise money by selling shares. The cash reserve dries up. Debt maturities arrive, 2028, and creditors want cash, not worthless equity. That's when the nuclear option kicks in. Forced Bitcoin sales or bankruptcy. Would it be a bloodbath? Yes, a total capitulation event. But let me leave you with one certainty. Bitcoin is not strategy. Bitcoin is anti-fragile. It survived MT Gox. It survived FTX. It would survive Saylor too. Those Bitcoin would be auctioned and redistributed. The one facing extinction is not the Bitcoin protocol. The ones at risk of losing everything are strategy shareholders, who took massive risk in exchange for massive upside potential. So, strategy is an incredible vehicle in a bull market, but it's financial leverage that cuts both ways. Know what you're buying and don't confuse the company's fate with the asset's fate. This is how I do market analysis. I objectively assess technical, macro, and fundamental aspects, based on numbers, not fandoms. I hope you enjoy it. And give me a like if you want me to bring this analysis once a month.